Hello everyone, welcome to today's discussion on the markets. The agenda for today is what lies ahead in the coming week. The On Friday we saw a very bad NFP number, and we also saw a fall in Fed rate hike expectations. On Friday we did a video. We discussed the implications the NFP will have on the Fed rate hike, and today the agenda is, as Omkar says, that equity markets will see a very good reaction in the coming week. We also have a data light week. So without much ado, let's head into the markets. Let's look at a few charts and see what is ahead of us. Hi Omkar,
Hi, Kaushal. How are you?
I'm good. Thank you. How are you?
Yeah, feeling lazy Sunday afternoon.
Sundays are always good. They are, they warn us actually that tomorrow is a Monday. We have to get back into the race in the morning.
Yeah.
Anyway, so let us give our viewers a short brief of what we covered on Friday, and maybe we can continue ahead.
Yeah, we talked about the falling Fed rate hikes and where going forward, what could be a scenario for a potential Fed rate hike, and it all depends, in my opinion. As I said on Friday, it depends on June payrolls report,
That's right.
irrespective of whether Britain stays in EU or it exits EU.
Okay,
And if the data is bad, then I guess rate hike would happen. If it has to happen, it would not happen before December.
that's right. So in a short gist, we covered NFP and the US rates, and our view is that the Fed won't hike till December because we have two interests. One is Brexit, one is the US elections, and but the risk is all in the June NFP report. We also did a short coverage on gold. Omkar is
Right.
bullish on gold because the fundamentals and the current market, we are bullish for gold into year end. We have a target of around $1,400. Is it?
Yeah, especially if
Yeah,
June payrolls report disappoints, then I guess there is no stopping for gold.
that's right. So at the end, we also took a look at the Indian stock market index, which is the Nifty 50, and we were bearish on the index for the coming week.
Right.
So Omkar feels that equity markets will react negatively to the falling Fed rate hike expectations. He has a very good theory on gold prices too. So Omkar, let's go ahead. Let's
Yeah.
go into the world of charts.
Yeah. Uh, let me just give a brief on why I think markets will react negatively to falling Fed rate hike expectations this
Sure.
week. uh, the primary logic behind this argument is I'm taking into consideration the experience Bank of Japan has had in the past couple of months. At each time their move into negative territory, when they pushed their interest rate to negative territory on Jan 29th, it wasn't well received.
Yeah,
Yen rallied, as well as equity markets were not happy.
that's right.
Same happened with European Central Bank in March.
Yeah,
They announced a big bazooka, and the end product was a strong euro, and equity markets didn't really cheer. Most
that's
of the
right.
people might think that Bank of Japan's move to negative rates, or ECB's big bazooka must have led to a rally in global equity indices, but it was more due to crude oil
Yeah,
rally.
yeah,
And now that crude oil is trading around $50 levels, most of the experts are calling for a correction.
yeah.
So that support, the crude oil may not act as a support to equity markets in the short run,
All right.
and that is why I think that markets are likely to treat bad news as a bad news now.
Okay. So
The NFP
markets are
was bad, so equity markets are likely to react negatively to falling rate hike expectations.
okay. So in short, the markets are coming back to sense, and we'll actually see a very good
Yeah,
this week.
right.
Okay. So which is the first market we'll be looking at?
First market I would
That,
like to look at is the Japanese yen,
all right.
and reason again is quite simple, because yen could weaken, as we had discussed, I guess, in a few one or two videos a
Yeah,
month ago, that the yen would weaken only if US hikes rates,
that's right.
because Bank of Japan has totally lost control over things, and there is very little it can do now.
That's right.
So yen would weaken only if the yield on US Treasury yields rises.
Okay. So I guess Abe or
Yeah.
Abe will have to come with another 100 arrows if you want.
Each arrow is likely to result in a fresh wave of yen buying. So here we have a sort of falling channel on chart, and the 106.645 level. If you see it on a weekly chart, it's a long-term 38.2% Fibo level of the move from 75, that is 2011 low, to 2015 high.
Okay.
And if that is breached, I guess we are heading lower to 104 and then 100 levels.
All right. So the immediate risk would be a dip towards 100.
Yeah, yeah, I sense that. I say that because one reason that I just told you, that BOJ has lost control, and if Fed
Yeah.
rate hikes drop, yen is likely to strengthen. The second thing is that equity markets are more likely to treat bad news as bad news now,
Okay.
and that would lead to carry unwind and
That's it.
again
That's
strengthen
right.
yen.
All right. That makes sense. And
Yeah.
I guess on a support level, I see something around psychological 105.
Right, is there around this high is 105.44 or 105.41, so
All
that
right.
is a support, and the oversold intraday indicators might also come into play.
Okay.
So
So another blip higher before we go lower.
quite possible, but the overall trend remains bearish,
All right.
heading
So
towards 100.
Asia will come into trading soon. What do you think? Where will be the first reaction seen? Equities, currencies.
First legitimate reaction, I guess, would come in, equity markets, I would say.
Okay.
So, because equity markets and gold are the two most sensitive financial assets, most sensitive to Fed rate hikes.
Okay.
So, if equity markets start losing ground, it would be a clear signal that more stimulus from Fed, at least in the short run, is a big no-no. It's a big negative for markets.
Okay. So we'll see Nikkei fall down and the Asian
Right.
markets will probably
Right.
follow.
Actually, right.
And we'll see another one.
Another indicator that, I would not call it as an indicator. Another pair that Asian traders, or we should track in Asia, is Australian dollar versus Japanese yen.
Yeah, right.
If that takes a dip, it would be a clear sign that markets are going to suffer risk aversion.
Okay, that sounds fair. So let's look at oil
Yeah.
maybe.
Oil, yeah. Let's look at oil. Okay, so I have here three rising trend lines that I've drawn, and they will act as a strong support level. The first one comes around 47, 47.80, 48 levels.
Okay.
And it's interesting because on our hourly chart, we have a sort of a head and shoulder. The right shoulder is being developed right now,
Okay.
and the neckline comes around 48 point, 60 levels.
All right. All right.
So 40, prices could take a dip to around 48.60 or 48 levels,
Okay.
and it makes sense to stay short as long as the recent high of
Above 50.
uh, about 50.83
Okay.
or 50.89, as long as this isn't breached on day and closing basis,
That's right.
I guess traders should try to be on the shorter side of the trade.
I guess we will come back to the supply demand
Right.
calculation again, and we saw in the previous week we saw an analyst give us the insights that no, there is still a lot of
Supply.
inventory.
Right.
Someday that is going to leak in the market, and again we are going to go short. And
Right.
okay,
Es-
that was an oil short is a good trade.
Especially the rally from 47 or 46 levels. It
Hmm.
was due to supply outages in
That's
Libya
right.
and
Yeah,
Canada. And
that's right.
now, see what happens is when there are events like fire or some accidents,
That's right.
companies, when they restore their capacity, they try to produce more in order to compensate for the
Compensate.
loss.
That's right. Yeah, we're mostly going lower to test that
Right.
channel again.
Right.
Sounds fair.
So yeah. So the next I would like to talk about is maybe FTSE index.
Yeah, FTSE is fine.
Let's see. And if you look at the weekly chart, anybody would feel that this is going higher,
Yeah,
because we can see a inverse head and shoulder pattern developing
that's right.
with with neckline around 6400. So that is a 200-point move from here.
Okay.
But heading into Brexit,
And the event.
which is just 2.5 weeks away or 3 weeks away.
Yeah.
And it's when you look at Brexit, this doesn't you don't get confidence by looking at charts,
Okay.
because no matter how bullish it looks, you are always skeptical.
Yeah. Right.
So if you're a pure technical trader, just forget about Brexit and stay on the long side of the trade for the target of 6400.
All right.
But as I said in the beginning of the video, if you see signs of risk aversion, then it makes sense to at least not be on the bullish side, but stay outside.
Okay. So stay outside the markets.
That would be better in FTSE right now, because there are too many event risks surrounding FTSE.
That's right. So on the lower side, I guess we have a strong level at C.
And it's very interesting. On the daily chart, we have a head and shoulder developing. This is a shoulder, this is a head, and this is a slightly higher shoulder. So it's very interesting right now.
Okay, so like stay away.
Yeah, that would be better. That would be better. Right.
What about the Dow Jones?
Dow Jones has had a bullish flag and pole breakout.
Yeah.
As we can see over here. Let me just close out the RSI so it becomes more clear. And as long as this trend line stays intact, trend line support around 17,681 or 17,620 stays intact,
Yeah.
I would, going purely by technicals, I would love to be on the long side of the trade.
Okay.
Or at least I would avoid going short, and I would think of building longs only if it sees a break above 17,900 levels, which is a May 31 high.
Okay.
And I would prefer to go short anywhere below 17,620.
Okay, so if you see a gap down opening tomorrow, below 76.20, we can think about going short.
Right, absolutely.
For the week. Okay, so in the coming week, do you have any other event risk? Data risk?
Data calendar across the globe is very, very light. Tomorrow we have Yellen's speech.
Okay. So,
but I don't know, if she comes out, even if she comes out hawkish, how markets are going to read it, especially in the light of Friday's horribly weak data.
That's right.
So I guess Yellen could turn out to be a non-event tomorrow.
That's right. So in the coming week, we are probably slaves to Yellen's speech, and if any other Fed members' speeches and the Brexit polls.
Yes, for British pound, and especially for British pound, it's Brexit. It's quite surprising throughout. The almost now we are reaching the first half of this year that equities are actually more sensitive to political events.
That's right.
But all this Brexit talk and Brexit fear mongering, it has had a very little effect on FTSE, and
that's right.
Pound has been more sensitive. So
that's right. The FTSE has been resilient to Brexit.
Right.
But into the weekend, like yesterday, I saw a lot of chatter on Brexit. People are like, no, we are going to vote for the Leave vote, and everybody, like, somehow the press is shifting its stance. Now we are no longer on the Remain side, we are shifting to the Leave side.
I many times, I don't take a lot of media hype seriously, because a very simple reason is that if I'm running a media house, I would love to scare the hell out of people.
That's right. The more the viewers, the better.
Because then it's like only negative will sell, and then only after that I'll get more and more TRP and viewership.
That's right. Like if I look at the sentiment data on the social media, it doesn't tell you anything actually. Well, like on the past few days, it was acting as a contrarian indicator, but right now it is it is saying nothing. It is blank.
Blank, right? Absolutely.
So let's look at a few currencies.
I would like to talk about gold in terms of Asian and emerging market currencies.
Okay.
On chart, we have had a big up move on Friday.
That's right.
And as we had discussed on a video on Friday, it bounced off the falling channel support, and now heading to 1252 levels, which is a 23.6% fib resistance of a larger downtrend, that is the 2011 high. And 2015 low.
All right.
So I guess this level won't last much. 1252, 1253 levels,
Okay.
and we could be heading to 1260, 1270.
All right.
But I guess the metal is even far more attractive in Asian currency terms,
Okay.
and the logic is pretty simple. That if Asian economies with large current account deficits,
Yeah.
they are more dependent on hot money inflows,
That's right.
and hot money inflows are more dependent on easy Fed policy.
Yeah.
However, but if markets start treating bad news as bad news, as we have discussed earlier
Yeah.
today, equity markets would take a hit, and so would the
Currency.
Asian equities,
Okay.
and that would result in weakness in Asian currencies.
Yeah.
So the net effect would be gold would rally, and it would rally more in terms of Asian currencies rather than in terms of dollars.
All right.
And so that makes gold attractive in Asian currency terms
Okay.
as of now. And other currencies, notable currencies would be euro dollar. It's looking really good now on charts.
It is not looking good. It might be giving heart attack to Draghi.
Yeah, for Draghi, it might be giving a heart attack, but for bulls, it's really good chart right now. And let us just plot a trend line here.
Okay.
So this trend line I've drawn from 1.0463. That was a March 2015 low,
Yeah.
and the second point comes at 1.0520, which was April 2015 low.
Okay.
And if we extend it,
We can actually see. Okay.
yes, so it's a bullish break on charts. And tomorrow, let's say, even if there is a corrective rally,
Yeah.
I feel it is going to take support around 1.132220 levels,
Okay.
and a rebound from there is likely to challenge supply around 1.1465 levels.
I guess we'll easily see a climb over there tomorrow.
Yeah, it's quite possible, because the dollar is going to get sold.
That's true. That's true. So let's have a quick look at the pound and pound dollar.
Pound dollar, it's mess on the charts right now.
You're scaring our viewers with those trend lines and
I draw so many because my trading or analysis is quite simple. I love to use trend lines because they act as great support and resistance levels.
that's right. And if you want to trade intraday, I actually plot trend lines on the 15-minute charts, and that is
Right.
how I trade the Indian stock market.
Absolutely. Pound is likely to underperform. When I say underperform, it is likely to underperform other currency pairs, other majors
Okay.
against the dollar.
Okay.
Which means if euro, Australian dollar, New Zealand dollar, Canadian dollar, if they are rising 1% against US dollar,
Yeah.
then a pound would rise, but it would rise by only 0.5%. And
Yeah.
the reason is pretty simple. It's because of Brexit.
Actually, fair argument.
And so it is quite clear that the great trading opportunity is sell pound against other majors.
That's right. That would be a pretty good trade.
Yeah. So I would rather look at euro GBP chart
Okay.
rather than cable.
Okay.
Just. And as I said,
Again, a
we
bullish.
have a bullish break from a falling channel,
Yeah.
euro GBP, and the potential entry would be anywhere above 0.7850.
Okay.
It's a very strong level because it is a confluence of Fibonacci levels.
Yeah.
7849 is 23.6 of November low to April high,
That's right.
and 7850 is a confluence of July 2013 high and July 2015 low.
Yeah.
So above 7850, it's
Yeah.
a good entry, and we can head back to 0.80, 0.8 levels,
That's right. That's right. So Euro GBP is a good trade.
right?
So I'm keeping a strong eye on pound yen.
Pound yen,
Yeah.
yeah,
Pound CAD.
pound yen. It's pound yen is looking scary, and I guess it has just breached the
Yeah. Has been that.
support trend line support level as well. So,
Yeah.
oh my God, it's gone. So,
Yeah. So it's a
it,
good.
it, it's a big bearish signal for me because this is
Okay.
how I read it. We have had a inverse shoulder, head
Yeah,
shoulder.
that's right.
We have had a failure at neckline,
Yeah,
and now we have failed at. You can call it as a flag and pole. This one is your pole,
yeah,
and this one flag.
yeah, right.
So failure at inverse head and shoulder followed by a bearish break from flag and pole formation, and that sounds terrible.
That is good. I love being a bear.
Yeah. So we are going to challenge, in my opinion, April low of one. What's the low? 151.64.
That's right.
In any case,
Yeah.
so
Yeah, I think going lower on pound yen and pound cad is equally scary.
pound CAD. Yes, yes. Pound CAD is looking bearish as well now.
Yeah,
We Let's put up a trend line again. It has been breached.
it has been beat and this
High 1.8748 has been breached. Is
yeah,
almost close to getting breached.
yeah, same as the RSI.
Yes, same as the RSI. It's
You
just
will see a good move tomorrow.
right. It's more likely to fall again. So as I just said few minutes back, Sterling is a good short against other majors,
That's right.
and we also have USD CAD breaking below trend line level. But I would not trade on USD CAD because oil can reverse anytime.
Yeah, that's right. It's too reactive to oil at the
So
moment. And
yeah.
I actually suggest to remain out of it.
So
So
these are,
let's
I guess,
yeah,
the
in the
important
majors
trades.
and the crosses, these were the good ones. Let's
Yes.
maybe have a quick look at dollar rupee and wind up.
Today is likely to see a gap down opening tomorrow, maybe around 66.85 or 66.70.
Okay.
Strong at 66.62 and 66.68. So if a rebound has to happen, it would happen from these moving average levels.
Okay.
Otherwise, we are heading back to a head and shoulder neckline level comes around 66.13.
Yeah.
A shoulder, head, and shoulder.
Yeah.
And on a larger picture, we need a clear break above this falling trend line,
All right.
which currently comes around 67.50. Only then, I guess,
Yeah.
bullish tone would gather pace again.
On the fundamental side, in the news, if I get a lot of news that Indian markets are going to fall, the rupee is going to fall because Raghuram Rajan is going to quit and whatnot. So maybe the market still price that in, and when it fails, it will run.
Rajan isn't going to cut rates, right? That's
Cut
what you
rate,
said.
he's going to leave.
Okay.
So
Even the
he's going to leave.
okay, he's going to leave. That would be a sort of bad news for markets.
Yeah, but I don't think that he'll be leaving soon.
Yeah. Him leaving would, I won't say it would decide the trend in INR, but he's got a very good reputation, great
Yeah,
reputation across the globe. So,
yeah. So the news was actually like I read an article in TOI and it mentioned that if Rajan leaves, we'll probably have a lot of foreign fund outflows. That would be obviously very bad for the
yeah,
markets
rupee.
as well as the rupee.
Yes,
So let's keep
absolutely.
an eye. Let's keep an eye on any chatter on that. I'll run sentiment today maybe by
Okay.
tonight, and I'll see what is happening.
Right.
Anyways, so any last tip for the viewers today?
The last tip would be keep your eye on global equities, especially for emerging market traders.
Yeah,
And that's it.
that's it. Okay, Omkar, thank you so much. That was a very wonderful, lazy discussion on a Sunday.
Thank you very much. My pleasure.
So thank you guys for watching. If you have any queries, tweet us at Dirty Economics. Do remember to visit our website, dirtyeconomics.com. Hit a like, subscribe, talk to us, send us an email. And that's it for now. Thank you so much. Goodbye, Omkar.
Goodbye, Kaushan.
Bye.